So the framework for looking at listed companies would say look at business analysis. So if you have a notebook, you can write that down. Then after business analysis, you can look at financial analysis and finally valuation. So business analysis is where it all starts, because we are not investing like people who are throwing darts at a board, but we want to be successful. Because of that, we have to look at opportunities that are likely to be profitable in future. So the future is unknowable, but at least from analysis, you can see that there are certain business models that tend to be favored in terms of growth, and also the margins are good. And in your opinion, if you look at the societal configuration, probably they are in those sectors where we have a lot of people using their products and services. So you can look at a typical family budget and look at needs. So needs are usually the first thing that we look at. So where are people spending their monies? Which sectors, which companies are they listed? Then you look at the business model. So we usually say that not all businesses are created equal. There are businesses which have superior business models, but some business models, you'll find that the margins are very thin. So if something happens, the companies will fall into a loss-making position. Again, some companies probably they're in sectors that rely on weather conditions, and they tend to be cyclic. But some are in what we call all-weather products and services. So we'll always use them even during recessions because they're the bare minimum in terms of what we need. So it's important to look at that. And then you need to understand how that company makes money. So let me see from the chart, like how do you think banks make money? So it's important to know, as a customer, what kind of charges or some money that is deducted from you and paid to the bank. So what are some of the things you pay? So if says loans, that's great. So interest income, great. What else? If you transaction the ATM, service fees, yes. So at least you need to understand as an investor, how does company X makes money? It is very, very key, because that one means now you understand why you are getting into that company. And then you can look at the economy, the way it is, the addressable market, the opportunities, because again, you can have a product that probably only 500,000 people can use, but there can be another product that all of us would use, or even 40 million or 30 million Kenyans. So it's important for you to understand how that business makes money, the industry that they are in. Yeah. So the second one is distribution model. So how is this company distributing its services? So it's very, very important that you understand that, because that's how that company connects with its customers. Since it exists to create value for the customers, then it will get value. When the customers get value, they pay for that service or product. So it's important. Is it self-service? Do they need outlets? How is that company structured in terms of how it is distributing its products and services? So that's very, very important for you to understand. Like, for example, how does EABL distribute its products? So anyone on the chat? So basically, when you're investing, we want you to be the expert who understands that company, and you can even have an intelligent conversation. You can educate us on the value chain, whether they have distributors. So they'll tend to have regional configurations. Then under that, you have like territories, then there are territorial managers, distributors, then finally retailers. Then from retailers now, the various restaurants or bars can get their products. So very, very key for you, please, to understand that. And that's just EABL. We have banks, we have Safaricom, and the rest. Then the next thing to understand is the competitive advantage, because again, competition matters. Competition is something that can be a risk to a business. And usually you find that companies these days, they share some of the risks that they might face. So you can see this is a very good example of a company that used to be a leader in a certain sector. Then later on, other companies overtook them and now they're leading. So you have such examples here in Kenya. But sometimes I find that when we share, people catch feelings when you talk about companies that they work for. But I believe you can understand from various sectors that what happens is that the company needs to maintain a competitive advantage. It needs to continue serving its customers, deepening relationships, offering more value so that they can keep growing. Otherwise, it might be surpassed by competitors, and that can be a real risk. Then management analysis is important. So you need to look at the people who are running these companies. So you have people who are very visionary. They tend to have the foresight to see into the future and then motivate and rally their staff, the board members, customers, shareholders, stakeholders, partners, and everyone towards that direction. Then when you look back, we say, wow, they've really done a great job. So very, very important to know that when you invest in the stock market, you are kind of like partnering with the people who are running that company. So you are like business partners. So if they are good people, it means your investment is likely to do well. But if they are not good people, then you might not do that well from an investing point of view. So it's very, very important for you to make that connection. So you need to write a checklist, then look at the company, then you look at these 4 items, and then you keep learning, you keep refreshing yourself as they release their results, whether it is every 6 months or every 4 months or on an annual basis. You keep refreshing yourself because again, investing and even running companies is a space that is very dynamic. So now to go to the practical part of it, this is just an example. You can see it's very, very important to know how does this company make money? How does it make money? And you can see that the whole idea of banking, if there's a new term that you can learn today, is known as financial intermediation. So Steve, you can type for them on the chat. So financial intermediation is the work of banks. So it comes from the whole idea that usually you have people who have excess. So whenever you've received your salary and you have an extra 10,000 in bank account, we call that one excess. And excess is sometimes known as capital. It is what grows investments in economies. So that money will be lent to businesses. So it can be a hustler business, it can be Safaricom, it can be CDSC, it can be Hilton Hotel. Several businesses would need that money. So that money is lent to them. So for you who placed your money in the bank account, you might get an interest. So that's an expense to the bank. But the people who are borrowing from the bank, like maybe overdraft to pay salaries, they'll be charged a slightly higher interest than the interest that the bank is paying you. So that is the primary banking business. It is what creates investments in an ecosystem. So the bank might get the overdraft, or the organization might get the overdraft to pay even 3,000 people. So when these 3,000 people are paid, they have money, they can afford to ride a Uber, they can afford to buy things from Mama Pima, they can do so many things in the economy, and that money circulates and we will all be happy. So that's how investments are created from the banking sector. But then there's the other angle where we have fees and commissions. So you'd say, you know what, I don't want to go to the bank branch. I just want to do my transaction on the mobile app or from the ATM. So from there again, banks, they make some commissions by charging you. So that is known as non-interest income or non-funded. So funded simply means that the bank is being funded by either depositors or bondholders. So that's why the traditional banking business, the earning is known as interest income because it is from the interest from loans. Then this other one is known as non-funded or just fees and commission. So very, very important that you take your time, and believe you me, there's enough time to do your due diligence before you invest. It's always important to do that before investing. So make Google your friend, make the websites of the companies that are listed your friend, and keep learning, and you get better. You'll be able to make connections now. Like this year, for example, we've seen that KCB, their long-serving CEO Joshua Igara left, and they acquired a bank in Rwanda. Later on, we've seen that they have an interest in DRC. So you keep on following and you learn from these companies. We've seen Safaricom is going to Ethiopia, So it's quite exciting now when you're interested, and curiosity is a big thing. When you are curious, even when you see news on Twitter relating to the company, you'll connect. But if you don't have curiosity, it's very difficult for you to connect and see the developments. So now from there, you can see if the banking sector makes sense. Then later on, you can drill down and find banks that you think have competitive advantage, and you be a friend with your broker, you open an account, you fund it, and you become an investor by buying the shares of that specific company. So this again is a competitive advantage. So this is just an example. The reason why we shared this is that many people might not know the bank that has concentration when it comes to SACCO ecosystem. So that can be a revelation. And this report is from SASRA. So someone would wonder, why would I need even to go to SASRA report? What can be of use to me as an investor in the NSE, yet SACCOs are not listed? So can someone give us a sign? Can you tell us what you see from the chart? So it should be information that we can all see. It should not be like there's some genius who is going to tell us invest in this company because of this and that. But that can be a way of generating investment ideas. So it doesn't mean that you invest in the winner in that category, but it can give you some light that, wow, so some of these reports can actually have some insights on investing. So what do you see from there? Which bank do you think is a leader in that space based on your observation? Yeah, so that is just an example. So again, when you go to things like diaspora, remittances, we find Safaricom and Equity are big in that. When it comes to banking for government, KCB is strong on that. EABL is very strong in the alcohol sector, BAT, tobacco. So that's how now you find that each company ideally have some strength, and you need to back that with facts or information. So that's very, very key. So go somewhere, at least convince us, because it should not be like an opinion where you just say, I think, I think is good, but it's not good enough where our money is involved, because we worked so hard for that money. So this is just an example that actually we can have sources of information, even from the Kenya National Bureau of Statistics. Then you can now drill down and see the strength in the companies of interest. Yes, I hope that opens our eyes. So now after that, now we need to look at, let's say, a certain company. What do you think matters in that sector? Like the critical success factors in certain sectors. So for example, if you are in the technology business and you are dealing with consumers, probably you're just making 100 Kenya shillings per consumer. So what that means that is for that business to really matter, you have to have a big market. You have to have a really big market for that business to matter. Because for example, if you're making 2 Kenya shillings per customer, there must be so many people who can be your customer in that sector. So like market size for telecommunication sector needs to be huge. If you have only 10,000 people who can use telecommunication services, we can't charge people like 50 Kenya shillings per minute to make calls. That's unsustainable. Many people will not be able to afford. So probably we are charging them 4 Kenya shillings, and because of that, many people can now make calls. So you need to check if that company ticks that box, that in terms of market size, there's a huge addressable market that they can reach, and also gross margins. So when you're in a business that needs you to reach many people, like power, we have Kenya Power right there, Kengen. So you need to be in a position where you can make good margins and reinvest part of the money that you're making to build the infrastructure, because I still want to make calls when I'm in Turkana, when I'm in Mombasa, Nyamira. So those are the reasons that will make people stick to that network from a technology point of view. And you can already see sometimes you have these fixed data or internet players that are very unreliable. So it means that limits the number of people that they can serve. But from an opportunity point of view, the market size needs to be attractive. The network effects. So for example, is there anyone who was introduced to the bank that they're currently banking with by their relatives or friends? So anyone on the chat, you can type yes. So how did you get to start banking with the bank that you bank with? So for example, my first bank was Post Bank, when I received my help and I was told by my mom to go and bank there. So that's an example of network effects. So that again, people need to be speaking on your behalf. You can't be everywhere. You can't be everywhere. So the customers need to say, wow, I like this bank. I like this product. So that's how now technology companies are able to grow. And you might have never seen a billboard of some tech companies, but use their products. Why? That is known as network effects. So your friend can even tell you, like you've seen there, kwani wewe unakaaje una M-Pesa? So you look socially awkward amongst your friends if you don't have that company's services or products if you don't consume them. So that is what we call network effects. And it's important that you up your game, you ensure that you provide good services, and that's what great companies do. Because of that, their customers sell them, also known as customer advocacy. Second, distribution channels are key. So how is this company distributing its products and services? So that's important. And you can see here, for example, that Safaricom has 260 agents, and these agents, they were paid about 32 billion in the last financial year. So that means that is a sort of a form of shared prosperity. If agents are making money, what will they do? They look at that agency business as an investment, and they'll work hard for Safaricom, put Safaricom logo there, tell you come and transact here. And in the long run, everyone wins. And again, from a distribution point of view, you can make M-Pesa transaction from your phone. So that is known as self-service, and is one of the advantages that technology companies have. So if you were trying to send money to a person and you realize that's a wrong number, there's what we call hakikisha, where you can cancel that transaction. So without that, you'd call Safaricom and jam the call center with calls, but now you are serving yourself. So those are some of the channels that you have. Then operational scalability is important. So have you ever had a service provider that is always overwhelmed with the demand, like they can't handle demand? Have you ever seen that situation? Who remembers the recent story whereby one famous celebrity, Taylor Swift, I think she had some upcoming event, and the company that was doing ticketing, they overwhelmed. I think the website crashed. So have you ever had such situation whereby a company is good, but it just can't handle millions of customers, and because of that, customers will run away from them? So that is operational scalability. So you need to have the operational scalability to be able to serve as many customers as possible. So that's a critical success factor. So it's important for you to understand if it is banking, if it is insurance, what do you think is the critical success factor? Does that company tick those boxes? If yes, then that gives you an opportunity to look further into it and see if it is worth investing in. Then just example of what we call durable competitive advantage. So durable competitive advantage is something that is sustainable. It's something that if you come into the market, you can't just knock off those companies from that strong position that they are in. So for example, if you look at Safaricom, you know that mobile money is key. It is important. They have a huge market share, and their product seems to just work. So probably you have people in your family, your granddad, grandmom, and they're able to use this service seamlessly. So that gives the company an advantage. And they have currently over 40 million customers actually. So that's an advantage. It's very difficult for you to start today and reach even 5 million customers. It will take a lot of resources and hard work. So that's an advantage. And currently, they spend over 40 billion in terms of capital expenditure. So that's what gives them strength. That's what makes their network to work for so many people in so many places and makes them reliable. And of course, distribution channel. So the late Bob Collymore once said that Safaricom services can reach where Coca-Cola can't reach. So that's an advantage. They're always everywhere in your neighborhood and you're able to transact. So KCB, one of its durable competitive advantages, or Moat, the products are like Fuliza, where they have partnership with Safaricom and NCBA. We also have Jazaduka, which is a partnership between Safaricom, the partnership is for 3 players, KCB, Unilever, and MasterCard. So it helps retailers to get some financing. And what is Inua Jamii? Anyone on the chat? So it's important for you, if you are an investor now, you have to start getting interested in matters Kenya. So understand the Kenyan financial markets. So even as a business person, I've understood that the more you're interested in Kenya, successful companies, products, and services, the more you'll understand what is going on and the more you're likely to be successful. So Inua Jamii, any ideas on the chat? What is the product? Yeah, thank you. So Ruth says the program is where funds are disbursed for the elderly. Yes. Yeah, so it's a very good product for the elderly, and they have some card there, and on a monthly basis, they get something from the government. So you must be of a certain age. Yeah, so it's important to understand. You get that by reading the website annual reports. Also, KCB has a robust balance sheet. The assets are over 1 trillion Kenya shillings. So that means that they can absorb shocks in the market. When you have situations such as COVID, we have tough times, they're able to survive because they have a lot of money in their balance sheet. And in the results that they released recently, excuse me, they had over 180 billion in terms of shareholder funds. So that means that they've kept a lot of profits, part of their profits, to strengthen the balance sheet. So that gives them strength to be able to absorb short-term shocks and also have capital to take advantage of opportunities. Like now, we are seeing that they acquired a bank in Rwanda, and they're acquiring a bank in which country? The bank is known as TMB. So if you don't know, again, that tells you that it means that if you are an investor now, you have to start getting interested. So you have to know what these companies are doing. Yes, DRC. Yes, so thank you. So brand, again, their brand is huge. So you know there are companies that are so lucky that people just walk into their branches and consume their services. So if you're a new company, you have to tell people, I'm so and so, this is what we do. But for KCB, someone would just be passing by and they see there's KCB, then they go and open an account. So that brand has got a lot of power. Then also people see them as the safe haven. They have that perception, which is a positive thing. People feel safe when they have their money there. So that's for KCB. Then you have Kakuzi, which is in the agricultural sector. So agriculture is a key sector in Kenya from an employment point of view, one of the leading sector. For people in rural places, you'll find that most of them, they tend to be in the agriculture sector. So that is huge for Kenya. And you all tend to consume agricultural product. So Kakuzi, again, has got a very diversified portfolio. So one of the realizations that you need to make is that about 98% of agricultural activities in Kenya, they are rain-fed. So for most agricultural companies that are listed, they tend to be cyclic. So they might make losses in years where you have droughts. But Kakuzi, because it has a diversified portfolio of some of the all-weather crops, they're able to survive, and they've been profitable consistently for the last 12 years. And also, they've never paid less dividends in the subsequent years. So either dividends usually stagnant or going up. So that is some sort of strength that you need to look at as an investor. So they have pineapple, cattle, blueberries, macadamia, and avocado, which is quite interesting now when you look at exports. So they also have a lot of biological assets, 143 hectares covered in forestry plantation. They have some cattle there, tea plantations, and avocado. So those are things that you can't just start today and have a lot of assets like they do. We also have Jubilee Holdings, which is one of the leading insurance companies. So this list is just to help you understand from a learning point of view. I'm not saying that you go and buy any company here, but basically, this is just an example. You can come up with your own set of what you consider competitive advantage. So they have a rich portfolio of investments. So if you use internet in Kenya, you might find that behind the scenes, there's a company known as Sticom, and Jubilee has got a subsidiary that has invested in that company. If you know IPS Building, which was the first high-rise building in Nairobi CBD, that company, Jubilee Insurance or Jubilee Holding as a company, has a stake. And they also have stakes in companies such as DTB, TPS, Serena. So that means that even in tough years that you have tough economic conditions, they're still getting sort of dividends from some of these investments that had already broken even. So that can keep them going. And they've been consistently profitable, even as some insurance companies tend to fluctuate and make losses in some years. So they also have a robust balance sheet with over 35 billion retained earnings. So that means that they're well capitalized to take advantage of investment opportunities. So they have a stake in a power plant in Uganda. So that one is your assignment. You can go and Google the research. In the next session, you can tell us which company that invests in the power sector in Uganda and is huge there, has Jubilee Insurance or Jubilee Holdings as part of its investors. So that's a good assignment. So it has also been in existence in the past 75 years. So that's quite some heritage there that they have. Yeah, so that is it with business analysis. So I would say in summary, business analysis is just for you to understand how a business works, who manages it, who runs it, management analysis, business model, how it makes money, and whether it is a viable business. So it can be a great name, a big name, but really it doesn't make sense for you. So it's very, very important for you to have a checklist, write down what would matter in that business and see if it makes sense. So Steve, I believe we should have some poll before we proceed. If that is the case, you can guide us before we proceed now to financial analysis. So please check on your screen which public listed company has the highest revenue numbers. Let's get to see. So even if you don't know now, it's okay. So it's okay not to know, but there's no one who is a genius who knows it all. But the whole idea is that once you are curious about an investment, can you go and research and find that information? That's all it takes. So you don't have to know everything. So there's no exam. The whole idea is that you can research and find out how much did Kakuzi make last year? How much did Longhorn make? You know, that's the whole idea of doing research. So you might not have all the information now, but at least you should know where to get that information. And you should know the answer is based on facts. So this is something that you check and you write down revenue for company X, then you'll now see that actually company X is the, company Y is the number one in terms of revenue. So thank you very much. So we can proceed. We can proceed to the next level, the next part of this presentation. So just before we proceed to financial analysis, I just wanted to share something with you on management analysis. And this is just an example. I'm not saying that you're going to invest in KCB, but can someone tell us the story that they see here? Because there's a time KCB used to be loss-making, but from the year 2003 to now, even as Q3 2022, they've always been making profits every year. So what do you see here from a management point of view? So if you want to talk about succession planning, everything, what can you tell us? What is your view? And it's important that you do this for different companies. Try to dig in and tell us the story of that company as something that is factual. Yeah, so Ayub thinks that it's good management leads to profitability. Yeah, so that's a good point. Yeah, and it should be backed with information and facts, you know. So that's why we did this, just to give you a good overview or an example of what management analysis would be. So you'll go and check their credentials, where they went to school, their reputation, where they came from, and how good they've been. And if you can trust them, then that should be part of your management analysis.